Welcome to the daily update, where I'll go over the action in the market for Monday, September 11th, and then we'll see how things are looking for Tuesday, September 12th. In spite of the very sad anniversary that was at least recognized in Monday's session, the market was able to eke out a gain. In the short term, we're switching back more to positive, but there's not a lot of strength. There's not a real solid foundation, at least at this point. The intermediate term is still mixed, and the long term is still hanging in there for right now. We have, even though summer is over, Labor Day is behind us, we have people going back to school, there's still a real apprehension right now. Now, in Monday and Tuesday session, we're not getting any economic reports. And then on Wednesday, we're going to get the big one, the CPI. And so there may be a lot of waiting for what's going to happen in the lead up to that. Before I get started, I am right in the middle of doing the 1 hour sessions for the 3 hour course. I did the first hour on Monday. The second hour will be on Tuesday. The third hour will be on Wednesday. If you can't make it, I will be posting recordings of this, so feel free to check that out. And you might find that it's interesting to you just to get a little bit more insight as to the way I do things and my approach. Let's go back and talk about what happened. Right at the open, we had a gap higher open. Prices immediately went above R2. Now, Friday's session, the spread between the high and the low was not very wide, so that made the pivot points for Monday not very wide. So quickly, we got up to 44.85. We fell back down to R1 at 44.71. So the market really stuck to the pivot points, at least in Monday's session. As the day went on, we rose back above and actually closed a little bit above R2. We were up 0.67% on below average volume. That's still dropping off. We're more positive in the short term. We're, as I said, not really building a foundation, a solid foundation in the intermediate term, but things are improving. We've had 2 up days in a row now. What are some comments that we can make? The S&P was able to get back above its 50-day simple moving average, and that's positive. That's kind of the line in the sand between the intermediate term positive and negative bias that we have. Mega caps did outperform. They ended up doing quite well. We're still dealing with this scenario that was developed a few weeks ago. At least at the time, the economic reports that were coming out were stronger than expected, and that was putting pressure on stocks. Then we went through a period where they came in weaker than expected, and that gave some support. Now we're wondering, is this scenario going to change with CPI coming out and will develop into another scenario? The market is still knowing that the Fed is going to have to keep rates higher for longer. And we've known that for a while, but then any economic report that comes out that's strong, it just reinforces that. If, especially with CPI, if it comes out stronger than expected, then you're going to see this fear of the Fed coming in and actually having to raise rates at some point between now and the end of the year. We're still dealing with the weak Chinese economy because a lot of S&P 500 companies do business in China. And then oil, even though it was down on Monday, it's been rising overall, and that's producing some inflationary concerns. The dollar was up and interest rates were up. Now, this has been providing some headwinds for stocks, but it didn't really seem to have much of an effect on Monday. The yield curves that we follow are still inverted. Sentiment is positive at 52, where it ticked up from 51. And our trend has switched back to positive. With the 2 up days we've seen, the green line is now on top, but the ADX is below 20. It's below its moving average, suggesting that we're not in a trend. And we're seeing the same thing with the short-term ADX chart. We are positive now with the 2 up days, and I've kept our momentum at mixed. We're still kind of at a tipping point as to which way we could go from here. We didn't get any economic reports in Monday's session, and we won't be getting any in Tuesday's session either. This is a chart that I went over in the weekend videos, and I found out about it from Chris Schiavocco from Schiavocco Capital. And then I was able to find this chart on Twitter. This is where do interest rates start to become a major concern? And based on this study right here, it's if we get above the 4.02%, then that's when they're going to really start to put a lot of pressure on stocks. And we're kind of right near that point right now, just a little bit below it. But we just want to keep an eye on this. And then I went through the isabelnet.com blog charts, and I just found this one. It's just talking about how oil, which has really been going up, but we're seeing a real decrease in supply. And a lot of that has to do with the news coming out of Saudi Arabia and Russia. And that's why it's really pushing prices up. You have the demand is still there, but the supply is less. And that is a very basic economic concept. Here's the intraday chart where we gapped higher and we pretty much set the high right at the open above R2. We came back down to R1. We spent the day clawing our way back up to R2 and then just drifted sideways going into the close. We didn't see much of an improvement. And this is the more internal foundation that I've been talking about. When we look at the growth to value ratio for the S&P, yeah, it came up and was pretty much near the unchanged level, but on an up day, it spent most of its day being underwater. We look at the growth to value ratio here where it actually declined overall. We've been chopping sideways since the early part of March, and we're still in a longer term uptrend, but if we see some more weakness here, we could turn into a shorter term downtrend. But for right now, it's holding up. We're also keeping an eye on the VIX. We're looking at an average from 1990 up to 2022. And then the red line is what has been happening in 2023. From here, if we stick with the average of what's happened in the past, the VIX would go up. That means stocks would go down. We'll just have to see if that follows through with this. Looking at the VIX, where we saw a bit of a tick down on the line chart and the bar chart, as fear still remains pretty low overall. And we are seeing volatility really decreasing with the VIX of the VIX. And it could, don't be surprised if it's that way in Tuesday's session. No economic reports the day before the CPI comes out. You're not going to have a lot of folks that are willing to jump in and take big positions. Looking at the equity put call ratio based on 5 periods, this is still going up, and that's a concern. We want to see this going down if that's going to give more support to the market. And then the VIX to VVIX ratio, it's turning over just a little bit, so it's showing some improvement, but we want to see this turn down with a more conviction behind it to turn things more positive. And then longer term, we're rolling over just a little bit, but we're still going back up with our 253 period simple moving average of the equity put call ratio. Then looking at the advanced decline line, we ticked up a little bit based on price and volume. We're still above the moving average. So this is holding up for right now. We're rolling over a little bit with the new highs and new lows. We saw a little bit more of an expansion of the new highs, but this is pretty much sideways right now. We're also going sideways with our 10-day moving average. The advanced decline ratio, we're coming slightly back above the midpoint with the blue line. That's the shorter measure that we use. And this is also a little bit of an improvement, but we want to see follow through from here. This is trying to measure what's the smart money doing, and we're coming back up just slightly above the red line, which is the moving average. We want to see this continue to go above this if we're going to turn more positive. Now, lately, we've been coming up a few times, looking a little bit better, only to go back down. So we don't want to get caught off guard with this if necessary. Looking at the shake and money flow, still negative, but showing improvement. We want to see more follow through with this. The ratio between the risk on and risk off, it was unchanged overall. We had been coming down in the short term. We bounced back up, but now we're not seeing anything really of conviction that's taking place right now. Here's the condition of our trend. The ADX is still below the moving average. The green line is on top. We're not trending, but we would default to the positive. And we see that same thing with the short-term ADX chart. Our daily chart, this is rather encouraging. We were able to get above the pivot point and above the 50-period moving average. That's always a positive thing. And then down below, volume was below average. Looking at the stochastics, turning back up in the short term, trying to turn back up in the intermediate term, flat to trying to turn up slightly in the long term. The force index, This is more positive too in the short term. We were able to cross above zero and actually turn green. Looking at our 20-period double and triple exponential moving averages, we're coming up above both of them right now. If we can see the green line go above the blue line, that would turn things even more positive in the short term. Looking at our 50-period double and triple exponential moving average, we're still down here at the red moving average. We want to try to get back above the blue one and then see the red line cross above the blue line in the intermediate term if we're going to turn more positive. The go, no-go system is still looking more negative. And the highest high, lowest low values were starting to cross back above the midpoint. So that is slightly positive. The TTM squeeze continues to be positive. It has the lighter shade of blue and it's continuing to advance. So this still remains positive. The balance of power ticked down just a little bit, but is still above the dashed line. The BPI for the S&P 500 did decline just a little bit. We're not really seeing any internal strength from this right now. So that's a little bit of a warning sign. The McClellan oscillator did just tick a little bit back above zero for the S&P. And so we're still going down, but trying to turn back up with the summation index based on price. We're already starting to turn back up based on volume. So this could suggest something positive, but we want to see follow through. The NYSE McClellan oscillator, still negative, but showing a little bit of an improvement. So the summation index based on price is declining as well as volume. For the Elder Impulse system for the S&P, we've now switched back to positive. And the mass index, we're still wondering if some kind of a signal was generated here. We don't really know yet, and we're kind of getting some conflicting signals. When this was really going up to give us the signal, that's when we were coming down. And then when we were going back up, the mass index continued to go up as well. So this is trying to give us the idea that there could be a change in trend, but we're not getting a real clear picture from this. The PMO is rolling over to sideways, and then we're rolling over just a little bit based on price and turning down, but still positive based on volume. And this is more intermediate term. We did see a bit of an improvement with the PMOs that are rising, turned up slightly with the buy signals, but we're still declining with the PMOs that are above zero. Swenlin trading oscillator. This is more negative in the intermediate term. We continue to decline based on price and volume. The NYSE bullish percent index still continues to be below 50. That's more broad-based intermediate term negative. But when you look at the NASDAQ 100, we're above 50 and advancing. That's suggesting that the really big stocks are outperforming, and so this is hanging in there for right now. We're still inside the Ichimoku cloud. To turn more positive, we want to break up out of the cloud, or if we come and break down below the cloud, that would naturally turn things more negative. Chaikin oscillator coming right back up to the midpoint right now, so it's pretty much neutral. The slope oscillator, this is our shortest term oscillator, continues to be positive, but the MACD continues to be negative. So when we look at all of our oscillators, we're okay with the slope. The TSI is rolling over. The MACD, PPO, and PMO are also rolling over, and we're seeing a little bit of weakness with the tricks, but the KST is still hanging in there. So we're getting a real mixed picture with our oscillators. We're still above the 50-period moving average. We had been right in between the simple and exponential calculation of this moving average, but the fact that we could close a little bit above that is positive. Looking at our moving average tree, we're above all the moving averages right now. This includes the 20-period and the 50 periods that the market's been battling with. And we're a little bit above the midpoint with our standard deviations chart, so we're leaning more towards the positive side. We're also breaking out above the open, high, low, close moving averages that we look at here. That's also shorter to intermediate term, more positive. Looking at the Bollinger Bands, we're breaking back above the midpoint. That's turning things a little more positive. But when we look at the parabolic SAR, it continues to be negative with the dots on top. Longer term, the MACD continues to decline. That's negative. Looking at our different chart variations, we're turning back a little more positive with the Heikin Ashi. We're looking positive with the Kegi. The Renko chart is also positive, and the three-line break is positive. So not a lot of technical damage has been done, And if we can continue to show some improvement, that could really switch things back over to looking better than they are. The equal weight versus the S&P 500, since the big stocks really outperformed, this ratio went up. Looking at the Dow, though, we still have overhead resistance. We're below the 50-period moving average and below the pivot point. But with the Elder Impulse system for the diamonds, which is the Dow, it's continuing to, actually, it switched to positive where it had been neutral. NASDAQ 100, this is more positive with the bigger mega cap stocks. We're able to break above this red line, which is the previous high, get above the pivot point and the 50-period moving average. Can we see some follow-through action with this? Where the Elder Impulse system for the Qs were neutral, now they've switched to positive. The NASDAQ 100 with the PPO, we're seeing a little bit of an improvement. This was starting to roll over, but if we can see more upside action in the market, that will help this oscillator turn more positive. Here's with the NASDAQ. We're above the 50-day moving average, above the pivot point. That is looking better, but we need to see follow through. We're coming back up to the 61.8% retracement level. This may act as some overhead resistance, but we closed just a little bit above that point for right now. The FANG index also been hanging in there, still above its 50-day moving average and a longer-term uptrend. The small caps, though, these are really lagging behind. It's still below its 200-day moving average. It still has this S1 level below where we're at right now. It's working off of a recent golden cross, but to see things really dive the way they did, we're going to have to see some really good recovery for the small caps to participate. Here's another look at the Russell 2000 small cap index. We're below 50, but turning up with the RSI, still working off of a recent golden cross, but the MACD is now crossed over negative. And looking at the Elder Impulse system, we are still negative for the small caps. And the small caps continue to underperform the S&P. The mid caps still in between the 50 and 200-day moving average. Nothing was really decided here, and we remain negative with the Elder's Impulse system. The mid caps still hanging in there when we compare growth versus value. It turned up slightly, been chopping sideways recently, but in a longer-term uptrend. And the transports are really underperforming the S&P. This is negative. We need to see this turn back up for things to turn more positive. And the Dow is continuing to outperform the transports. That's also negative. We want to see that switch to get more of a positive stance on the market. We did see a bit of a tick up in interest rates on the 10-year. And then looking at Tom Bowley's research, where real estate is not strong in the month of September, and that's pretty much coming to pass, where industrials tend to do a little bit better. We're in the middle part of September now, where it could be a little bit more positive, at least historically, based on his research. But be aware, near the latter part of September is when we often see some weakness. So what's our outlook for Tuesday? We're still dealing with earnings reports that are being released. The technicals are turning back more positive, but we're still not trending yet. We won't have any economic reports. We're keeping an eye on the geopolitical events, but it's going to be all about CPI, and that bleeds over into inflation and interest rates. Here's the updated calendar so far, where we didn't have any reports on Monday. We won't be getting any on Tuesday. CPI is going to be the big one on Wednesday. Looking at the Stock Traders Almanac statistics, we are now into options expiration week, where we tend to be up 57.1% of the time and down 42.9% of the time. Historically, though, September 12th tends to be positive across the board for the Dow, S&P, and NASDAQ. We will be on the 8th trading day of the month. And then I switched this over. This is an Isabel Net blog chart, but this is covering all the days according to their date. So September 12th, we do typically see some strength during this time. Then when we look at a little further out, we're coming more into the middle part of September, where sometimes we do see a bounce from here. And then looking at the S&P during election years, where we might get some strength out of this that has happened historically. But please be aware that later in the month, we historically will see some weakness. And then just to go back to 1950, looking at all pre-election years, we're only up 33 1/3% of the time in the month of September. So our scenarios, not going with the down one, not going with the up one. We're still pretty much going sideways. We could lean more to the positive side since we're looking better that way. And we are showing some improvement, but we're just not trending right now. The warning signs, the longer-term trend signals, the weekly chart of the S&P and the NASDAQ, we're still below the trend lines. Seasonally and historically, September is a weak month. The equity put call ratio continues to go higher. That's negative. The longer-term equity put call ratio turning down just a little bit, but we want to see more follow-through with that. The risk-on posture, it was looking a little bit better, but we were unchanged in Monday's session. The cumulative new highs, new lows for the NASDAQ continued to show weakness. The 3-month yield is still above where it was back in 2007. It hasn't really rolled over yet. The parabolic SAR chart is still negative, and we're dealing with earnings season. On the positive side, I went over this in the weekly video where the seasonality and setups, those are still in the background, and they are positive. The daily special K chart is positive. The weekly chart is negative. The S&P is still above the downtrend channel upper line. The oscillators, we're seeing a real mixed picture right now. We want to see more follow through with this, both with the NASDAQ 100 and with the S&P 500. The S&P continues to outperform utilities, and the staples to S&P 500 ratio is declining. This should give some support to the S&P, but it really hasn't done much, at least over the last month to month and a half. The Russell, the small caps, and the mid caps are working off of recent golden crosses. Small and mid cap growth have been chopping sideways, but they're still positive. The financial sector, even though it's been getting hammered a lot lately, is still working off of a recent golden cross. The Copic curve did generate a recent buy signal. So our conclusion, we're turning more positive now, but we're not trending. In the short term, we are positive right now, but that would be pretty risky. We want to see some more follow through with this, where in the intermediate term, we're still mixed, and we need to see more of a foundation coming in to turn things back more positive, and we're just not trending. But long term, we still remain positive. So thank you. I hope you have a really good day. I hope you found this video useful, and I will talk to you in the next video.